Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Monday. What's up, everybody? Monday morning edition of the Daily Market Commentary. Hope everybody had an amazing weekend. We are up a little bit this morning, but a lot of sideways price action with a week chocked full of announcements, lots of things going on. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are returning to the channel, do me a favor, hit that little like button right there. I know it doesn't take long. Come on, just do it. Little thumbs up. All right, good. Appreciate that. All right, let's go ahead and get rolling. S&P up 7 points this morning, but we're chopping around below the all-time high, which is the potential breakout area. So if you remember from Friday, we had our confirmation short level right in here based on this all-time high, and we actually got a little move away from it as we came up into that level and moved down. Now, last night we gapped up and we've been trading up ever since, and so we do have a breakout potential above that all-time high. Now, if we break out, typically, historically, on breakouts of all-time highs, usually you get a little bit of a pullback right after. So if we get a bit of a pullback, there are some decent demand areas down here. But it's pretty easy to look for my shorts. I'm not looking for any because there's no reason to do so. My thought is that utilizing something like options gives you an opportunity if the market feels a bit heavy, which I will say it's feeling a bit heavy. We're seeing slowing volume. If I throw my volume on there, let's put the spiders up so we can see. If we look at volume and we add volume to the equation, we can see that volume is really tailing off here as we approach this high. We've got, zoom in there, we see the volume's tailing off, and that's what gives me the thought that the market might be a bit heavy. So I put that in on Twitter the other day, that this is the time when you've got low volume coming to an all-time high, but if you take a look at the implied volatility, you're really low in the implied volatility range, right? This is when it's okay to take speculative options plays. Buying a put if we get below, say, here, gives you the ability to still take advantage of a heavy market without shorting the market up at all-time highs, right? So waiting for the market maybe to come down below last week's low and then buying a put while we're still in that low volatility area. So just an idea, something to consider. But as far as today goes, we're better off on the S&P looking for the breakout if we get it. Now remember, lots of stuff just kind of hanging out as we have both Brexit news and FOMC. As it looks as though the Brexit news is pretty much going to go with an extension to December or January, so but we're still settling in. NASDAQ, wash, rinse, and repeat, exact same thing that I just talked about. Have a little bit of a demand level down below us in case that we do get in here, but we've actually already put in a new all-time high in the NASDAQ. That 80.75 was the old high. We've put in that new all-time high, so from here on, it's uncharted space as there's plenty of room for price to rally higher. Crude oil. So last night we were looking at this while we were in class in the live trade room. We were looking at a potential breakout above 56.86, and we got a pull back from that level. Now, is that a bad thing? Not necessarily. All it does is gives me another opportunity to short, provided we get some basing, right? The basing still not short, to break out, providing the basing occurs somewhere around here. Basing down here is not going to be close enough. I need the basing to happen closer to the blue line up there. For what we have now, we actually could go candle to candle on a long. This is a good reversal. We've come back into a demand zone and it's starting to move. So if you wanted to go candle to candle on a long from here, I think it makes perfect sense. Gold, last night we looked at this level here in gold for a potential breakdown if we get below this line, and a reversal in this wick over wick area here. Once again, still hanging in between. As we move over to our bonds and currency markets, our best setup from last night that actually has made entry since last night is our bond breakdown. So if you took the bond breakdown trade from last night's class, then you are making a little bit of hay right now. If you did not take it, I think actually this one sets up for a candle to candle short as well from where we are right now, as we're kind of popping back up. A candle to candle short from here makes perfect sense. If you took the short, why don't you go ahead and take your stop and move it to break even at this point, or even take a little bit off the table, or just to make sure that you've locked in a little bit of gains. We've moved 2 to 1 from where our initial stop would be. The Aussie, we had put in place this potential for a reversal trade. Now looking at this on a 15-minute chart, because we looked at it on the 15, we did trade halfway into the level. 1, 2, 3, 4, 5, 6 candles later, we had done nothing, which means that it's really it's an entry, but it turns out to be an entry with no real movement potential. And following the 6-candle rule, you should be out at basically break even on that one. We do have another 15-minute level that we're coming up into right now, but the 15-minute level we're coming up into with the basing here down below really weakens the probability of this level, because my reward to risk is not as high. So I would say it's probably better to hold off and not take this one due to the reward to risk that close. The euro, we've come off of our little potential breakout area, rallied up pretty nicely. This breakout area still exists, as well as a reversal up top. And then the Canadian dollar, we have really no close levels at the moment, potentially down in here if we get a bit of a reversal. This is kind of an addition from what we didn't have last evening. And then last but not least, Great British Pound, Japanese Yen. The pound is really chopping sideways. I still have a potential breakdown in the pound below this area right here. But remember, we don't want to take a breakout on an announcement, right? The breakout can happen, announcements can drive us to reversals, but I don't necessarily want to take breakouts on scheduled announcements. And that's what I think could happen here. So you may want to hold off on the breakout, pending the Brexit news. A little bit of a reversal potential here, but it might just be good to stay away from it. And then in the Japanese yen, a little bit of a move down from there. So overall, a lot of sideways price actions today. Some opportunities, are out there and do exist, but that's really why it's good to trade not just futures, right? Part of the reason why we look at options as other alternatives. When the markets are going sideways, there's still plenty of trades out there. So if you have any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody.